Seventh floor.
We'll see you around the timeline. Feels good to be back.
I think the Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm guessing from space. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
Zoom out. The institutions aren't coming. They're simply here. It's the golden age of crypto, guys. Get right. Let's go. welcome to the nest. See you on the show.
Close the door.
Market's down, but we up.
Let's go, Rob.
Guys, welcome to the show. June 23rd.
Wow. What happened last night? Apparently the Korean degenerate over-levered monkeys threw us for a whirl, dumped our stocks, dumped our tokens, dumped our everything. You're watching the roll-up. We are live from the Tokenization Tower, The Nest, broadcasting live from the financial capital of the world. Today's June 23rd. We have a great show ahead. We've got Cory, Klippsten of Swan, Arush of Alpaca. As always, guys, we're live in the tower, powered by our friends at Plume at The Nest, on-chain infrastructure for a future of asset management. Rob, what happened to our portfolio overnight?
I'll tell you what.
GM Rocky, what's going on, man? Good to see you here.
I'll tell you what happened, Andy. So last night began a journey into a spiritual realm. Personally, I'm continuing on this path. I will be taking it directly into the Peruvian highlands. But, you know, there's all sorts of magical mystery happening and energy in the air. It's a very fascinating phenomenon. This concept of decorrelation, concept of decoupling.
Yeah, relative strength trade, guys.
Relative strength trade.
Great job, roll up. Kemi Holland, yo, what's up, girl? How you doing? I watched Holland last night play soccer at the World Cup. 2 goals. Guy was on fire. I've never seen a guy accelerate like that. Like the goalie gets the ball in the box by himself. Anytime the goalie would get the ball, this guy would just it was like a cheetah attacking a baby wildebeest in the wild. He would just turn on the jets and it'd be like bang, and he just charged the goalie. One time, he successfully got the ball from the goalie one-on-one. He's on the far right side. Crowd everyone stands up. Holland starts sprinting. Everyone just jumps up. Gets the ball, goes to the side, shoots it right past the goalie, right off the right post. Missed it.
Wow.
Oh, dude, it was something else. Never seen anything like. I've never seen a guy go from dude, this guy he doesn't even play the game. He just trots around midfield for 79 minutes, spends another 12 minutes in the box, just kind of standing there. And then the rest of the 3 minutes of the game, he just puts the Jets on. It is just insane. He does nothing. He scored 2 goals, did nothing the whole game, puts the Jets on for 3 minutes of the whole game and scores 2 goals.
I saw another video of Messi just standing there, not even running, just standing there. And all of a sudden, one thing comes to another, balls bouncing back and forth, ping-ponging across the different parts of the field. Somehow it ends up in his area. He gets it, turns on the Jets, immediately sprints and attacks the goal.
And this is against Senegal. Holland was outpacing the Senegali elite. All right, guys, we're at the tower. We got Markets and Weather live. We got the Swan CEO live. We've got the Alpaca, head of crypto in the tower. As always, our topics are powered by our friends at Trezor. Use code ROLLUP10, Trezor.io. Grab yourself a hardware wallet. Secure your coins. Secure your keys. Don't get quantum attacked. Don't get MEV rug pulled like Jared from Subway.
I gotta say,
Let's get into the markets.
For Mr.
And the weather.
Klippsten to join because he is going to have some takes on
Stretch. Yeah. All right, guys, let's get into the markets and the weather. Before we do, let me tell you about our partner, Frax, building infrastructure for the future of digital money, open, stable, borderless, the most scalable stablecoin infrastructure for the future of finances at Frax.com. It's a beautiful 67, end of June, 67 degrees in the city. I don't know if you remember last year, Rob, we were at Permissionless outside on our very first in-person live stream conference event.
How could I forget?
And it was 92 degrees.
Yeah. Wow. How's it feeling?
Outside in Brooklyn. It was terrible. Today's 67, windows
here.
open, vibes are up.
Gotta feel nice, chill, comfortable 70 or so in the studio?
Yeah. It was supposed to dump on us. Yeah, 73. It was supposed to dump on us at the game last night. It didn't. That was another win.
Tell us.
He's my guy, and I love Korea. So excited for this episode. You love Korea. Well, the Koreans are destroying our markets right now. Their index got hit hard overnight, and I think that led to some of the contagion that we're seeing.
Yeah.
Guys, as always, the weather is powered by our friends at Relay. Easy way to swap tokens across multiple chains from one UX. Better UX for your users. Start swapping seamlessly at relay.link. Let's get into the markets. I know this is what you guys want to hear about. Before we do, let me tell you about Denari, our tokenized equities partner. Trade SpaceX on Hyperliquid Spot and more. Visit denari.com to learn more. And it's right out there. Near is back under that $2 mark. Chainlink under that $7.50 or $7.75, $8 mark. Solana had like this coordinated shilling over the weekend, and I knew that was a bad sign. Like, I knew that was a bad sign. Like, it was so obvious. Like, oh gosh, why are we doing this to ourselves? Why are we shilling Solana? We're gonna get punished for this. It's kind of like the same thing with Ethereum. It's like, why are we shilling Ethereum? We're gonna get punished for this. Oh, Ethereum's outperforming, Solana's outperforming. Oh, we're gonna get punished. And that is what happened. Ladies and gentlemen, we are getting punished for our sins. And Bitcoin is just barely holding the lows.
Yeah, feels like it's make it or break it time here for markets in general, Bitcoin included. I mean, you know, half the ecosystem's calling bottom, the other half is calling for 40K.
Yeah.
So we probably just stay here and chop for a little while. People get very apathetic, stay off the 3Ls, and just stay patient.
Yeah,
we're gonna
definitely
look back on these opportunities to buy down here. It's gonna be like a blessing, but obviously can't get chopped up. And we're talking, you know, patient time horizons. So difficult market conditions right now, but obviously, I mean, these are opportunities at these levels.
Yeah, I mean, I agree. I think we'll look back in this time period with like a sense of joy, a sense of happiness, gratitude. But yeah, you have to have the ability to not get wiped out and to be buying at low levels. Equities as well. Tech had a bit of a risk off. I believe the NASDAQ's down a bit today. S&P only down 1%. NASDAQ's down 3%. So that was not what the Bitcoin believers wanted to see. And yeah, I mean, dollar is moving back up. So I don't really have a read right now other than protect. And I still think it's as simple as this high quality token, revenue generating, good token economics. It's not going to be not volatile. It's going to be volatile for sure. But I do think it's still that simple. So.
Yeah, I think this is, I mean, we've been saying it, but this is where kind of men are separated from the boys, winners and losers are, you know, this decoupling feels like it's the most possible era to separate because things are decorrelated from one another. And so, you know, right now everything's sort of chopped, but you also have these spurts of speculative movement, right? We kind of saw that from Aerodrome. We, you know, hype, Zcash, near VVV, like had that speculative kind of, you know, momentum. And so I feel like there's kind of these pockets of momentum and it is rotating because people are looking for something in order to like, you know, kind of rotate into, but nothing is sustainable. Nothing is catching a sustainable bid until the macro environment improves, until, you know, whether that be equities, macro, Kevin Warsh, the war, everything, you know, you can kind of attribute the macro environment to a variety of different things. But generally, now is when, if you can catch some of those pockets of momentum, you're going to do okay. But that's a risky endeavor. So probably.
Yeah, I think like a longer term play is more of like the zoom out, the allocate slowly.
The dollar cost average, just build long-term positions here. Yeah. And I continue to be of the belief, if your time horizon is correct, that building some of the positions in the tickers, the companies that have been performing best up to this point are the ones that are going to outperform later on down the road. We're going to get the speculative meme coin, new coin, good coin type of fervor as well. But I can't help but think, you know, in the next cycle, let's just call it that. I think the 4-year cycle is alive. Call it the next cycle. Zcash is going to do well. Hyperliquid's going to do well. Near is going to do well. All the
Lighter's
coins.
going to do well.
Lighter's going to do well. Aerodrome's going to do well. Even Uniswap is going to do well because they have revenue as well. some of these things are going to outperform others because, well, they're either undervalued or overvalued relative to their fundamentals. But I think all those things that we just listed off, those are the things with fundamentals. And so, yes, maybe they're not catching this bid right now, but when you do have this expansionary tailwind, these are the things that are in position to outperform.
As always, guys, our markets are powered by our friends at Zama. Visit Zama.org to learn more about their confidential private transactions on chain. Let's keep it rolling into the news. We got a bunch of stuff to cover for you guys. Before we do, let me tell you about Near, your home for building, discovering, and using apps on chain. One account, no borders, your financial life all on chain. Absolutely crushing it with Near.com. Here we go. Samson Mao predicts that Atom 3, which is Adam Back, will not be able to deploy the $1.5 billion from the SPAC merger to acquire 23,000 Bitcoin or so.
Yeah, but he's saying that he was wrong. That was a previous prediction that he made. And so Adam Back has Adam Back is notoriously like a super OG Bitcoiner. People thought that he was Satoshi. There's still people that think that he is Satoshi. He's doing a lot of things that make me think he is not. However, he's been extremely instrumental in both Bitcoin core development as well as the Bitcoin mining scene. He is working on a SPAC merger that would give him control of a Bitcoin treasury company in Cantor Equity Partners. They will decide on the SPAC combination that would bring Adam Back his Bitcoin standard treasury company public as BSTR. And so there's a new MicroStrategy on the street. Adam Back has been in the game a long, long time. They already have 30,000 Bitcoin as a result of Adam Back's mining endeavors. That puts them at number 5 in the corporate leaderboard of how much Bitcoin these companies own. He will raise an additional $1.5 billion if this vote goes live and passes. That would put him in position to acquire another 23,500 Bitcoin. Samson Mao in this tweet says that he was thinking that Adam Back would have to buy higher. However, Bitcoin prices are still at these lower levels, giving him the opportunity to get in at a lower average entry than Michael Saylor and acquire 23,500 Bitcoin, $1.5 billion worth, and that would raise his total to 53,500 coins. Still quite a bit lower than the amount that Saylor and Strategy have, but it is $1.5 billion in buying power. Andy, the other thing that I want to mention here, and this is based on the conversation that we had with a partner of the show in the tower, is that a $1.5 billion, look, it's a lot of money, but it might not meaningfully move the price of Bitcoin on first go. No. What I think is important to keep in mind is that we removed 23,500 Bitcoin off of the liquid order book out there in the supply of Bitcoin that is being traded back and forth. This means this would be added to the total of already 30,000 Bitcoin that Adam Back has. You combine this with straight strategies, stockpile, the amount that Tesla has and sovereigns have and the US government has and all these treasury companies have, and a lot of Bitcoin is no longer out there for sale. This is the same that is going on with all of these treasury companies. Maybe the cash that they're plowing into this asset doesn't have a meaningful impact on the price right now.
Yep, I totally agree.
But you end up with these supply constraints. And if you do get macro tailwinds and you do get a rising tide that ultimately prints more liquidity, that liquidity is going to find these assets. And if there's no longer supply to meet the demand and the liquidity in these assets, you're going to end up with these supply constraints, supply shocks, whatever you want to call them. And that is when I think we could really see some volatility to the upside. And so again, stay patient, build positions, not financial advice. But if you can maintain patience and positioning, I think you're going to be in a good spot here for the ultimate rise of volatility when the next cycle resumes.
Yeah, I agree. I think it's an additive to a bullish market thing. We can still have a turbo nuke across the board.
Yeah.
And honestly, it's seemingly more and more likely as the days go on. Obviously, it's a red day today, so you're saying that today, but it's just kind of part of the process here, guys. And yeah, I mean, these things are amplifiers of the bull trend, not necessarily reduction of the bear trend, I suppose.
And I mean, you can look at examples in the marketplace. Think about like what's happening with SpaceX right now. Low float, low float.
Things getting cooked.
And it's getting
Look at that thing real
cooked.
quick.
And so low liquidity, low float is a factor that is going to lead to high volatility. And you know, we're crypto native. So the way I learned, and I'm sure people learn this lesson a million different ways, but the way that I learned this was through LPing into AMMs. And so, right, like you know, the playbook is like, okay, well, if this thing has low liquidity, the AMM is going to move sharply. And it happens in both directions. And if you move sharply and then you add liquidity at whatever new price point there is, it's going to stabilize the price because less impact relative to the entire balance of the pool is going to take place. And I think that is what's happening right now is we're seeing supply get taken off. We're going to see increased volatility. And I think that could happen to the downside first. It could happen to the upside later. But nevertheless, we're going to see more volatility as the liquidity and the supply on the marketplace shrinks. And I think that's just something to watch and be careful of.
A great segue. Let's get into the next piece because we got people in the chat saying we got JB BMNR looking appealing for once, as is ETH. And then I said, you know, like, so is SBET actually. You know, SBET's trading at, Sharplink's trading at a 33% discount.
No way.
And like compared to their amount of ETH
NAV,
their ETH in NAV. And then you sent something today from one of the PR people, I think, right? About if we want to get Shalom on. But what was the news though?
Joe Shalom and Sharplink have a couple of things that are happening. Obviously, we saw ETH Labs. Congratulations to ETH Labs and everyone who's involved there. We're very, very excited about this new organization in the Ethereum ecosystem. And we have on the screen here sort of this scaling back of the EF. Vitalik also posted a tweet today talking about some of the difficult decisions that the EF has been facing. In summary, TLDR is that Ethereum has reduced its headcount by about 20%. That is what has already happened. That is not what is going to happen. Also, they decided to cut the expenditure of the EF by 40%. And so the EF is scaling back significantly. What I think is important for people to understand that I did not realize until I spoke with some of the people at ETH Labs is that the Ethereum Foundation has a principle of subtraction. What that means is that they had a very outsized influence on the Ethereum ecosystem when it first launched. You know, Ethereum Foundation, they had an Ethereum ICO. There was like all of this centralized coordination to get Ethereum off the ground. The most influential that EF ever was at the beginning, and they have scaled down continuously over time as a result of this principle of subtraction. They want to get less and less influential in the ecosystem. And so all these things about people and saying that the EF was disorganized and discombobulated and didn't know what it was doing. Well, it was scaling back intentionally. We know that now, and I think communication could have been a little bit more articulated, a little bit better, but ultimately we know what is happening now. They have this principle of subtraction, and it ultimately opens the door for new organizations to take what they feel like is a more opinionated path for Ethereum and stewarding the ecosystem forward. ETH Labs is doing that from an R&D perspective. Bitmine and Sharplink are doing that from an investor relations perspective. And these companies are driving the ecosystem forward, and they're picking up where the EF left off. And I think the EF is going to continue to scale back. And so Sharplink in particular.
So let me tell you about the Sharplink news. So basically they announced a $75 million registered direct offering priced at approximately 41% premium to the last closing share price. So basically it was quoted at 7.49. The last closing share price was 5.29. And basically it means that whoever invests in this deal gets no upside unless the price of SBET gets above the warrant strike of $8.15 or the stock goes above the premium that they paid. So that's like, it's unlikely that SBET's gonna, do more dilution down here and buy more ETH or dilute their shareholders. And they use the proceeds of this offering, the $75 million, to buy more ETH rather than buying their own shares. So I thought that was interesting. Maybe, not sure. I mean, I see a tweet here from DCF God talking about it. He would have preferred that they went and actually bought their own stock rather than buying ETH.
Because they're under NAV.
Way under, yeah. And then also they obviously led the funding of ETH Labs, them and Bitminer.
Yep. And
so when you look at SBET, and I mean, this thing it's at all-time lows.
Yeah.
I mean, it's basically since when it launched, it's at all-time lows. I mean, this thing is at $5-ish, trade all the way up to 120. And then Bitmine kind of the same kind of setup. It's down to 15. So
Embarrassing.
So yeah, I mean, guys, I don't really know if I agree with DCF God here. I think this is great news. We might get Shalom on to talk about it. It was a great episode last time. You guys seem to like it. Got a ton of views, ton of good comments. But then also at the same time, like a lot of these Ethereum conversations right now, you have these people in the comments just saying like ETH's worthless. It's no better than any other chain, yada, yada, yada. So
I mean,
kind of an interesting state for ETH right now.
It's a shame to see sentiment so low, but I mean, saying it's just another chain. And I saw someone else, I think it was our friend Simon from Moonrock, just talking about how, picking up the pieces of what's left of Ethereum. Like, we're talking about the chain with the most stable coins. We're talking about the chain with the most RWAs. It's been around the longest. It has the most Lindy. It has the most resilient infrastructure. It has the largest contributor development set. I mean, there's just so many things that Ethereum still has. I get it. The growth has decelerated. Maybe it has diminished in recent times. But I mean, people are disillusioned with maybe the depreciation of ETH, the asset, as of late. Haven't really seen that from Ethereum, the chain and the protocol. It's still leading on several metrics. The only thing that I think you can take if you're worried about another chain taking market share from ETH hasn't been Solana. Maybe you could argue Canton, and maybe you could argue Hyperliquid. I think Hyperliquid is going after something fundamentally different. I think Canton, maybe you could make an argument, has taken some market share in terms of institutional settlement volume. But in general, I think we haven't really seen Ethereum lose market share within the crypto world. It's just that the crypto pie has shrunk as a result of market conditions broadly. So look, maybe I'm contrarian. I'm still bullish Ethereum. And I say Ethereum, not necessarily ETH, the asset. That remains to be seen. We'll see what happens. I'm kind of neutral, no opinion on ETH, the asset. But when it comes to Ethereum, the chain, I'm still mega bullish.
Yeah. All right, guys, let's keep it rolling here into the next piece. Before we do, let me tell you about Infinify, building DeFi infrastructure for simpler access to on-chain yield, liquidity, capital allocation, higher yields, no leverage, all on-chain. Visit infinify.xyz. Tokenizing 1% of the global stock market could bring trillions of dollars on-chain. Carlos Domingo breaks down the path to get there. So Carlos is the CEO of Securitize. He's arguing that 1% of the $100 trillion, $150 trillion global stock market could move more than $1 trillion as assets on-chain. Obviously, Securitize is going forward into their public offering, SECZ, a SPAC, coming onto the stock market soon. So again, more public offerings for crypto companies. We actually love to see that. Let's keep it rolling. Let's go and play this video because I think that we generally agree here.
I think tokenized stocks and ETFs, if you think about it, from a size perspective, is probably the biggest opportunity because just the New York Stock Exchange that we recently announced the partnership for, they're going to be trading tokenized stocks 24/7. If 1% of that moves, it's $4 trillion. It just kind of triples the size of the crypto industry today. 1% is nothing. Now, which one is going to be the first mega cap company that is going to go and say, I'm going to tokenize? It's going to be Tesla, it's going to be Nvidia, like Apple. Then when you get the first, then getting the second is easier, the third and the 10th and the 100th. And then that's when it explodes, right? I think tokenized.
I mean, this guy's right. Tokenization doesn't need to replace global markets to become massive. It just needs to have a tiny share. And that's kind of like what we're seeing. And that's also this bull thesis for all these DeFi protocols that we've been talking about, whether it's Hyperliquid or Aave or Aerodrome or Backpack and Wormhole and whoever else, right? All of these, the bull thesis is they've achieved a certain amount of product mass by trading crypto assets. Now they're going to go out and trade every tokenized equity, every tokenized commodity, and then any possible instrument on chain with some decent liquidity, leverage against it, borrow against it, collateralize these things. It's like, that's still the same thesis. What Carlos is talking about, still the same thesis for our DeFi protocols that you know and love. Don't have much else to add on this. I think the next one is pretty interesting as well.
Last thing I'll add on Carlos and what he's saying about tokenization is that we heard from the CEO and co-founder of Anchorage Digital yesterday about how about the potential new use cases here, growing the pie. What is currently possible in off-chain, yes, you can tokenize and you can remove a ton of idle cash from the system. You can make that productive, and you can ultimately reduce overhead earnings. You can pass a lot of these savings and a lot of this capital back to end users, or it can end up flowing into asset prices as a more productive use of capital rather than just sitting in cash. The other thing that we heard that tokenization can do is it can enable use cases that are previously non-existent. And I think that is something that Carlos would agree with here, is that as you collateralize, tokenize, fractionalize, you can do all of these things that are currently not possible. And so you could say tokenizing 1% of the global stock market, sure. You could say it doesn't need to replace any traditional markets to become enormous. Even a small share of global equities moving on chain would create $1 trillion asset class, sure. Even if you don't replace global equities, even if you just add functionality on top of the existing equity market, the existing capital markets, you can still have this massive industry just with this enablement, this added functionality. And so if you have, think about the pie right now, obviously tokenization is going to try to get some market share of that pie. But if you just grow the pie, that is also going to add trillions of dollars of potential market share.
Agreed. And that's kind of like that is the breakthrough that's going to happen. And it's going to happen so fast too, with the banks issuing stable coins and the amount of these assets tradable on chain. Next cycle is going to look so different than this previous one because of just like the size that comes. And look, let's move on to this next one. I think people will enjoy this one from CZ here. And his takes on Hyperliquid, because I think it's a very hot topic and a debatable one about decentralization. So CZ's crediting Hyperliquid for building a strong product and succeeding in the no KYC perpetuals markets that centralized exchanges cannot easily serve. He mentions that Jeff was part of the early incubation, and basically he doesn't really believe that it's decentralized, and he has some thoughts on what they're doing. And it's kind of an interesting conversation.
They occupy a niche that Binance the Exchange cannot compete. I would never do what they do, given what I've experienced in my life.
I want to ask about Hyperliquid. It's one of the few actually positive coins in return this year to date, but also obviously a big and growing platform. It sits somewhere, I would say, more decentralized than Binance, although less decentralized than like Uniswap, as an example, somewhere in the middle. Have you met Jeff? What are your thoughts on Hyperliquid?
So we have some interesting history with Hyperliquid that I didn't know about with Jeff specifically. I never met him in person. He was actually in one of the earliest Easy Labs incubation seasons. So I assume he's a very smart young kid, and he obviously very capable. Some long history there. And also, I think the Hyperliquid invention is actually awesome. He proved a new market niche that was not proven by other people before. So he created something new, which is very interesting. But apparently he has a very small team. I'm sure that team's very capable. They occupy a niche that Binance the Exchange cannot compete. They don't have KYC. They claim they're decentralized. Again, I'm not going to comment on another project. Based on the technology we see, they have a lot of control. It's a small team that controls the platform. They use a smart contract for deposit and withdrawals. That claim that's decentralized. I'm not going to get into the definition of it. That's not my place. But they serve a niche where, look, in the US, if you have a VPN, you can use it, right? So everybody knows that. They have pretty decent volumes, and they are able to service many users that Binance cannot serve, which, again, it's not in my place to comment whether that's good or not. They have some technology innovation that I think is quite good.
I mean, just since you raised it too, the history of no KYC crypto exchange is filled with people getting in trouble for that. Should they be worried?
I would never do what they do, given what I've experienced in my life, but I'm not a legal person. I cannot give other people advice. I assume they have good lawyers. They're making a lot of money. So I assume they're big boys. They handle themselves.
What is your read on that, Rob?
I think CZ's scared. I think he first, kind kind of cuts Hyperliquid down by saying, look, they have like a smart contract for deposits and withdrawals. But then he can't help but admit that they have some technological innovations. And I think it's more true in that what he said in the latter part of that clip, which is that they've got more than just a smart contract with deposits and withdrawals. They've been able to orchestrate and create a very technologically innovative platform that has, builder codes. It's got deep penetration into the perps market. It's been able to succeed where others haven't. There's a reason for that, and it's because of the competency of Jeff and the team. And I think that worries CZ. I think he also makes some good points about no KYC. And I think in the Gary Gensler era, Jeff would have been tormented and Hyperliquid would not have been possible. However, I think because of the friendliness of, Paul Atkins, Hester Peirce, the CFTC chair, all of these guys are extremely, extremely favorable towards perpetuals. And I think that is supporting Jeff and is somewhat against CZ. So I think CZ's scared. I think what he's saying here is that Jeff essentially has the opportunity to do something that CZ never would have been able to do and never would have attempted to do. And I think that is going to create some competitive market conditions. But I do think CZ is obviously a smart and capable person in and of himself. And I think he points out some potential risk factors for Jeff and for Hyperliquid because the regulatory risk is real. I think also it is not decentralization is a spectrum. We've talked about that at length on this show. And Galaxy host interviewer, presents this perfectly. It's not as decentralized as Uniswap. It's not as centralized as Binance. It is somewhere in the middle. And I think Jeff and team is going to have to figure out where they sit so that they can more completely serve this niche. But I think they have been able to kind of toe the line up until now. And the more open-minded that the regulators are, the longer that they can stay patient and wait before choosing whether they're centralized or decentralized. They effectively have the leverage here because of the friendly regulation environment. They can kind of sit back and use the benefit of hindsight and patience to feel where this regulation regime is going and then react accordingly. And they are now in a position where they can choose, do we go in a more decentralized route, add more validators, kind of take a more progressive path to decentralization, right? Or do they take a more centralized path? And they can even potentially do both paths depending on which jurisdiction they want to pursue. So this is ultimately where we want to get to, but I do think CZ's feeling the heat. They're taking market share, and I think Hyperliquid also has proven the model on the tokenomics side.
New Type says CZ's definitely jealous.
Yeah,
I agree. Although their advantage comes from operating where centralized exchanges can't, right? And that same positioning of the decentralization and regulatory risk is going to have to be solved in the future at some point. The question is when and how. And kind of how does that affect your trading thesis? How does that affect your positioning, et cetera? This is for you guys to figure out. For us, I mean, the fact that this question was even asked and the CZ had an answer like that, I think speaks volumes as to where we're at in the market structure for these things. So I'm going to leave it at that. We're going to keep it rolling, guys, into our next news. Before we do, let me tell you about LeFi, building infrastructure for cross-chain swaps, bridging, and routing across the on-chain economy. Visit lee.fi to explore smoother cross-chain swaps and execution for your assets. Alrighty, guys, 5 former Ethereum Foundation researchers have launched ETH Labs org, an independent nonprofit focused on preparing ETH for institutional adoption at scale. Hard to be anything but bullish on this, guys. I feel like they are actually focused on number go up for ETH, on institutional adoption, on getting people to buy ETH at scale here in New York and globally. Sydney, Hong Kong, Singapore, London, Paris, New York, LA, Miami, these big regions where there's big capital. I feel like these guys care about that stuff. I feel like it's hard to be anything but bullish on this. Agentic finance, larger scale DeFi, tokenization. This is happening. I don't really think it changes anything in the thesis. Doesn't change anything in the technicals, clearly. Technicals are going to be technicals no matter what.
I think it will, though. I think these ETH Labs contributors, the 5 former EF researchers, have held roles in the research and development teams at the EF where they actually worked on EIPs and shipping features to the Ethereum protocol. Now I think they're going to be contributing their intellectual resources to Ethereum products. And I wouldn't be surprised if we see Ethereum branded products live from ETH Labs. So that could mean like an ETH wallet. That could mean like, you know, and there's already a lot of these things that exist out there, but I think this team is going to be focused on shipping products that are Ethereum aligned and focused on, you're right, number go up technology.
Yep. All right, guys, let's get into our daily equity before we get Cory Klippsten up. We're going to go real quick here, and then we're going to talk stretch because I know you guys want to hear about MicroStrategy and more. So let's get into the daily equity powered by our friends at Denari. Quick one here, and then we're going to go straight into Cory, talk about MicroStrategy, stretch, and more. Stick with us. It's going to be a good segment. Let's go. Crypto traders are now stock traders? Question mark. Updates from the SEC, below par for STRC and more. Link is in the post. Coinbase is rolling out one-to-one backed US equities for non-US users with dividends, voting rights 24/7, and DeFi composability and more. Crypto traders are stock traders. Let's go ahead and scroll down a little bit just to get an understanding here in this video or in this image here of tokenized stock issuers and what it looks like for each of these providers. So you got Securitize, Ondo, Xstocks, and Coinbase. You see the tokenization method, Securitize direct issuance with the chain, Ondo one-to-one backed SPV held shares via structured notes, Xstocks one-to-one backed SPV held shares via a tracker certificate. Coinbase is undisclosed, and their tokenization partner, I think, was Centrifuge announced.
I believe so.
So, guys, I mean, just to make a quick point here, you need to understand what you're actually buying when you're trading these tokenized equities. Obviously, this is powered by our friends at Denari. They also have a native direct tokenization format, which is very similar to Securitize. It's actually a little bit more, I would say, polished. I mean, obviously, could be biased there, but it's quite literally the direct full ownership in a beneficiary account, KYC, and a sub brokerage to your name on it. So you get a guaranteed one-to-one ownership of these equities. Ondo Xstocks do not provide that same level, but there's also advantages to having this wrapper model. And then Coinbase is still kind of TBD. So guys, I would just say in this segment, it's important to understand what you're buying. You must know the differences between the tokenization types. We have several videos on this. We'll continue to talk about it. Make sure you understand what you're buying when you're buying tokenized equities. That wraps our daily equity segment for today, Rob. And we're going to flow into Cory. Cory Klippsten is the CEO of Swan, a massive Bitcoin company. Last time he was on the show, we were having fun talking about what is coming for Swan, potential IPOs and more. But I mean, guys, can't help but to think about what the hell is going on with Stretch, MicroStrategy, and more. I think that's where we start. I think that's where we're going to end up. So we're going to get Cory up on the show, and he's going to tell us his opinions, sometimes unfiltered, unbiased, and purely dialed, because MicroStrategy is in trouble right now.
Oh, it certainly is.
What is Stretch trading at here? 87.88. All right, let's get Cory up. We're going to start with Stretch and figure out where we're at here. Get the show started. Cory, what's going on, man? And what the hell is happening out there?
First of all, in as much as I might be an expert in anything, it's Bitcoin, not stonks. So let's start there. So you'll get basically regurgitation of lots of things that I've read and lots of things I've heard from other people, but this is not how I spend my day. That said, I talk to a lot of people and I read a lot. So,
yeah,
you know,
I'm sure you do. I mean, more just like, what the hell is your opinion of MicroStrategy as of June 23rd? Like your personal take?
Well, I would say if you were going to rate, if like 10 out of 10 was maximum freak out, and that was indexed to the depths of like 22 and 23 bear market for strategy, we're still at like a 3 or a 4 on that scale of 10. You know, there's tons of believers out there. There's tons of people that kind of understand functionally that a leveraged Bitcoin equity in LBE actually does make sense. you probably get tripped up if you believe some of the marketing languages rather than what's actually described in the filings and the disclosures. And that's probably where you see some of the people getting upset because, a perpetual preferred equity is not digital credit. That's a term of art and it's a marketing thing. And they actually are fairly careful to explain the difference and that it's just convenient to talk about it that way. I think there were marketing oversteps for sure, talking about this in comparison to money markets or savings accounts and things like that. I think they'll deservedly take a lot of lumps for the AI generated ads about getting rich on, safe securities, whatever. I think it was a mistake to welcome the shady offshore crypto DeFi folks into the fold and put them on stage at Strategy World and encourage looping leverage on Stretch in DeFi. Like, I think that's going to end up being a disaster.
Stablecoin
basically, like, it's an if then statement. If it takes off, then it will blow up. That's so why would you chase that particular thing? I'd rather do stuff, kind of onshore. One thing that I think also was probably a bit of an overstep, and this didn't come from strategy, it came from some of the other treasury commentators, was it does make sense to tranche returns in general. So it does make sense to say, hey, I'm going to take leverage through a perpetual preferred, and that will make the equity levered up by 1.2x or something, and that's what MSTR is. And so if that's well managed and the costs are kept low, it's essentially like 1.2x or 1.3x ETF, more or less. And that actually does make sense because that compounds and you could own a lot more Bitcoin per share over time. So that functionally that makes sense. It's not easy to figure out how to do that, or lots of people would do it. But as we know, in normal ETF land, it's basically impossible to track the asset perfectly on leverage, which is why 2x oil ETF or 3x short Tesla or whatever it is, these are actually hedging tools. They're not buy and hold tools. So it is a bit of alchemy to come up with a structure where you're trying to have perpetual leverage on an underlying asset. So it will always have to be pretty actively managed, and you'll have to be creative, and you'll have to be good at marketing, and you'll have to both encourage competition to some degree so that it's not just you, but also ward off competition, because otherwise, the demand goes somewhere else. So it is really a very actively managed strategy by definition. It can't just kind of sit there and exist, because things will just break and you have to react to things going on in the market at the time. Where I thought there was, as I was getting to, a pretty big overstep recently, and this is the only thing that I've really commented on, as being kind of over the line. I'm actually okay with them calling Stretch digital credit, again, as a term of art, not an actual description of what it is, because that's not what it is. But when you started to talk about tranching Stretch and saying, hey, we'll have a lower interest product that is principal protected, that has a lower interest rate, and maybe that's 7% or something like that. And I think they're already doing this with a couple of DeFi tokens. But you'll see this soon in normal securities land in the US as well. And then there would be an equity tranche, essentially, that takes the leverage provided by the people that have the principal protected senior tranche, and then the junior tranche has higher expected returns, but a lot of volatility. And that's who would be sucking up the principal risk when it drops from 100, the attempted peg down to 87 and, et cetera. They'll make that yield back, if it zooms up toward 100. And, they're also getting the excess from the 7% or whatever that goes into that's the guaranteed return, for the senior tranche. And they get the delta between that and levered up. So it should be something like, if you took, didn't they just raise the dividend again? I didn't see what they raised it to. Did it just go to 11.5?
I believe so. I believe it's been, and then now at the current price of Stretch, obviously the yield is significantly higher because you're pricing in a repeg as well.
Yeah. I mean, you can't actually call this a peg of any kind either. Maybe management target.
Yeah. Yeah.
So I've been always very careful to put, peg, repeg, and depeg in quotation marks anytime I write about this stuff, because you can't actually control these things particularly well. But what I was going to say is I did see somebody actually run the math, and it does, when it was 11.25, so similar for 11.5, but it should do something like, 7% on the senior tranche would result in a very volatile 16% on the equity tranche or the junior tranche. As we know, though, from all the blowups leading up to the GFC and then basically causing the GFC back in 07, 08, the senior tranche, just because it is marketed and described as principal protected, that doesn't mean that it actually necessarily is. Because if you zero out the equity tranche above it, and it goes to nil, then you eat into the returns of the senior tranche, and that's what you saw with CLOs and all these mortgage-backed securities and everything. They thought the AAA tranche was super protected because there's all these junior securities above it, but they all zeroed out, and then you ate into the principal of the AAA tranche too.
Yep.
So look, there's risk in this stuff. And I think there's a lot of people that are in this market that were like born after Liar's Poker was published. But my generation, like we all read Liar's Poker, and we all read Fiasco, and we all, like, it was just kind of expected that you would understand financial plumbing, and you would understand the origin of all these securities and tranching and IOs and POs and CLOs and CBOs and MBS and all these things. If you were kind of interested in finance in the 80s, 90s, 2000s, maybe I should put together the canon of shit you need to read to understand what you're seeing on Twitter and the things that people are saying. Because if you don't have a background in the stuff, you're just clicking blind.
There's a theory out there among people that strategy needs to blow up in order for Bitcoin to kind of recover back to 100K and higher. Are you in that camp, or are you in the camp where strategy, is it beyond the point of no return, or do you think strategy can figure it out?
They don't even have to figure anything out. They just need to not blow up, and Bitcoin price will go up, as it always does, inevitably, as more and more of the 8 billion people on Earth understand what it is and that it's better than everything else as far as money. And the price just naturally goes up in adoption waves. So, there's nothing they need to do other than just not completely F it up and try to turn all the little dials. There's 50 different things that you can do 1% better, and if you nail most of them, then you're slightly better. But sitting on a huge pile of Bitcoin with some leverage that's responsibly managed, and the thing is obviously well marketed. They're good at marketing. And Saylor is a generational salesman. It's my favorite kind of engineer archetype salesman. I've been around a lot of these guys in my life, and they're a special breed to have the ability to talk to people and sell visions and come up with turns of phrase, but also have a deep engineering background. Like it's fantastic when somebody is good at it.
And so if you're Michael Saylor right now, what do you do in order to make sure that strategy doesn't blow up?
Well, they don't have to do anything. They
don't have to sell Bitcoin. They don't have to sell MicroStrategy shares to raise cash. They don't have to do anything.
Well, no, they did just sell MicroStrategy shares to raise cash.
Mm-hmm.
And and on their metrics, the way that they look at MNAV, and that's debatable. It's they have a little bit of a have your cake and eat it too situation where they add the value of Stretch and then the market cap of Stretch basically, and that's where they see what their MNAV is. But they're also calling it digital credit, and usually what you would do if you actually think it's digital credit, then you would subtract it. But I get that. It's because they never have to pay back the principal on Stretch, and so that's why they add it. So they're on strategy adjusted MNAV or whatever. It's like 1.14, which is below their target of where they didn't want to hit the ATM, but they did. They did hit the ATM last week, and they built up, or this week. I don't know whenever that was. I think they just announced it yesterday, and they topped up their cash reserve. And I don't. There is no existential risk to strategy right now at all, short of Bitcoin like plummeting to 20K, which would put them under a lot of pressure for lots of reasons.
Yeah, Cory, I think the government, the U.S. government, just put out some quantum dominance. I mean, I don't know. I saw a banner of Trump's face with big text that said quantum dominance on it.
Well, he also said something about quantum cryptography. Does anybody know what this means? As he was signing it. So he made this little joke. Like, he has no idea what he's talking about, as usual with these things. But my guess is it's probably something about more investment in quantum. That's probably just money being funneled toward certain companies and research labs. That's probably the announcement.
Yeah. And so as you're looking at what we have in front of us in terms of the circumstances for Bitcoin here, people are considering quantum, they're considering strategy as some of the systemic risks. And I think generally it's just a prioritization of people, what is happening in their mind as far as, what are the things that we can work on right here, right now, that is going to help us take control of the Bitcoin narrative and ultimately help more people get educated, help more people get smart and realize the opportunity that still exists here for Bitcoin. And so if you're kind of, giving us some insight into your own mind, how you think about this, what is sort of the 1, 2, 3 highest prioritization items that we can help people understand as far as, as it relates to Bitcoin right now?
So look, first, let me caveat this by saying that narrative follows price. Price does not follow narrative. And so we'll Monday evening quarterback this thing later and say what it was that drove the Bitcoin price. But I promise you, it's not any of these things. These are just things that people talk about. And just like we call bullshit if we know a stock well and you see the Journal write about it or the Times write about it and you're like, they don't know what they're talking about. That's the same thing around quantum and strategy and all these things. Like, people need an excuse because they've gotten their clients into things and they have to tell them, whose fault it is that it's not 300K yet. That said, now on the second part of what you just kind of launched into, what can you actually do to help adoption, which also spurs price? I think the narrative that is staring us in the face and the real risk to people is basically the encroachment of government. It's Leviathan coming with CBDCs and with age verification, which by definition means ID tying to your social accounts in the UK, VPN bans coming in Utah and parts of the EU and the UK. Big ramp up in talks coming out of G7 about digital euro and digital ID. And so really this is a freedom, sovereign money, sovereign human moment in time, and it's dramatically accelerated just in the last week. All of the stories that I just mentioned are from the last 7 days. And I happened to be in London last week as the social media ban passed. And so I was there as people were reacting. And I'm telling you, most smart people, mid-career have their head in the sand. They have kids. They don't even see it. Like, you have to have a certain lens to understand what's actually going on. And that, having to enter your ID to get access to Facebook, WhatsApp, Twitter, LinkedIn, I mean, they've got you. And they throw people in jail for mean tweets, right? So, the UK is basically a place where you might want to own a little bit of Bitcoin, and you'll probably want it in self-custody. You don't want to have to ask for permission to get your money. It's kind of against the point. So I do think this is a great moment in time to market real on-chain Bitcoin and tell people about it. And, it is dramatically different than ETFs. It's dramatically different than holding some MSTR stock. And this is a great moment in time to make that case.
The other thing, and I agree with you, and I think, some of the, more advanced discussions around censorship, both at a financial point of view and a technological point of view. It happens on the internet, could happen to our money. These things are, posing significant risks, and people have taken them seriously to the extent where they've started, and feel free to push back on this. I'm sure you will if you think so. But there is this growing cohort of a rotation from Bitcoin to Zcash because maybe not so much that the risk of political censorship is present, but more so the risk of institutionalization is present, and that could result from things like MicroStrategy and Sailor, and this idea of like this cypherpunk ethos getting co-opted in Bitcoin, but still existing in Zcash. Do you prescribe to this? Do you think that Zcash has some fundamental strength in its privacy technology that Bitcoin maybe not as much? Where do you stand on this Bitcoin to Zcash, both philosophical and financial rotation?
That was a bullshit coordinated pump by folks in SF. There's nothing special about it. Like 99% of that shit is held on exchanges. It's just a meme. It's easy to move the price of something that is tiny, a lot easier than to move something that is worth, north of $1 trillion. So no, it's bullshit. Even among those projects, like Monero is like way, way, way better than an insider pre-mined corporate coin that claims to be private. So no, Zcash is trash.
On Monero, just because from what I've heard is that there was like this IRS backdoor that got hacked, but maybe that's not, or like the ring signatures weren't as secure as previously thought.
Look, man, I spend absolutely no time on altcoins. I studied altcoins for like a year in 2017, 2018, and I saw what I needed to see. Like, focus on Bitcoin. Look, the whole thing, all altcoins trend towards zero in the long run in BTC terms, no matter what. All 30 million of them always have. There's only 3 coins that have ever had a second all-time high in Bitcoin terms out of 30 million after their first pump. Like, you just don't need to spend time on this. It's trying to get into like a basket of cryptos, like that's diversification, not diversification. These things are decentralized in name only. There's a handful of proof of work projects that, are interesting little experiment test beds or whatever, but their coins have 1/1,000,000th or less of the hash rate of Bitcoin, and they are just experiments and playgrounds, and there's no reason for them to ever, like, the battle for supremacy among digital assets was won way more than a decade ago. And it's just people kind of woke up to it in late 2023, early 2024. And now there's basically, unless you're on a crypto show, it never comes up. It doesn't come up with a single client. It doesn't come up with any mainstream media. It doesn't come up in Wall Street. It literally never comes up unless I'm on a crypto show. I never, even banking panels, even if the other people on a panel, I just did this 2 weeks ago, I was on with like 3 crypto infrastructure types. They're all Bitcoin maximalists. They know there's no thesis for altcoins, and they state it openly. And these are people that, run crypto companies. And so I just think it's, if you are still spending time, thinking that holding some moonbags matters, no. If you're an insider and you're getting it for like 1/10 of a penny and you can dump it on somebody's head and you're morally fine with that, like, you do you. There's plenty of scammers out there, and it's not a big deal. Like, there's people scamming on TV and in the White House constantly. So, but that's what you're doing.
So even this concept of tokenization, where there's a lot of like traditional financial institutions, as they say, that are working on tokenizing equities, and maybe that can allow them to do
those are real world assets.
complicated-
Those aren't digital assets. Those are real world assets. You're literally just talking about record keeping. So I've said for a long time, because I have a lot of friends that went and got like the Wharton blockchain certification, and they want to be able to like still exist in polite company. So look, I've been saying since 2019 that the inevitable end for crypto blockchain DeFi and the bull case is to become part of TradFi, and that the bull case is incremental improvements to digital IT. So it's, basically join the Goldman IT department and work on Rails and settlement and shit like that. And that's all they're doing. And there's nothing wrong with that. There's nothing wrong with that at all. There's very little white space now between Coinbase and Robinhood and E-Trade. They all are just trying to be like retail liquidity venues, and they want tokenized gold futures and altcoins and prediction markets and some Bitcoin and some futures and all these different things, right? So, if there's a quibble there, it's really just about the over financialization of the economy, which is something that's been trending for a long time. And it's, basically we're already at north of 20% of GDP is finance, which is non-productive, and historical baseline is like 5%. So we are very much over leveraged in gambling, and this is part of the fiat Ponzi and money printing and all of that. And if I have a quibble with the Wall Street, crypto, DeFi, wanting to trade everything all the time, it's that, if they succeed, then we go to like 40% of GDP is non-productive. And that's what they're aiming to do. And then there's also some end of empire correlations where, a populace that gets lazy and fat basically ends up focusing on gambling, sex, and food. And so that seems to be where we're at is, I don't know when you guys grew up watching ESPN, but in the 90s and 2000s, it was about sports, and now it's all about, the over under and all the shows and all the ads. It's 100% gambling. And I just think that's where most of this stuff has gone is just people gambling on their phone and just kind of reacting to dopamine hits and kind of base instincts. And, so it's just like, that's the quibble is kind of like, it's not great for society, but I'm also a big freedom advocate and people should be able to do whatever the fuck they want. And who am I to judge? So it's not like everybody thinks that me playing basketball 6 hours a week at age 48 is productive. It's probably not.
Yeah. How tall are you, Cory?
A little under 6'4".
All right, there you go.
But I'm a point guard, which doesn't really match well with pickup basketball.
Yeah. You gotta, man. So just looking at the landscape here for Bitcoin, I mean, I'm going to get into the technicals a bit, which is there's this thesis of this logarithmic growth curve. Actually, a guy that I'm sure that you're familiar with, Dave the Wave, he's got an amazing Substack. He pretty much solely focuses on Bitcoin, talks about the broad altcoin market cap, but rarely ever individual tokens other than Bitcoin, maybe a little bit of Ethereum. And obviously, Bitcoin's just been following this logarithmic growth curve, and he calls it not necessarily a price of appreciation or a kind of growth. He just calls it the maturation of the asset class, and you get into the law of diminishing returns. And so, just going forward, is your expectation for Bitcoin less volatility than in the past, more shorter kind of speculative moves up and down, and kind of the ending of this 4-year dynamic that exists, just zooming out to this logarithmic growth curve, this price maturation, and how do you think about what the future looks like from that perspective?
Yeah, so inevitably when you have large numbers, it's harder to move them by the same percentage. It takes a lot more capital to do that. And so that's inevitably going to happen, that as Bitcoin gets larger, the volatility smooths out, and that will naturally lead toward more and more people actually using it as a medium of exchange, right? We're currently in the early stages still of Bitcoin as a store of value. There's 3 functions of money. It has to be a widely used store of value before it becomes a widely used medium of exchange, and it'll have to be a widely used medium of exchange before it becomes a widely used unit of account. So you can think of this as, here, let me try to do it this way. You can think of this as 3 staged S-curves, where you'll be up the vertical part of the store of value S-curve before you even start at the inflection point from the bottom and start to see that adoption as medium of exchange. And then it'll be another couple decades before you start to see Bitcoin start to take off as unit of account. My expectation for this is that Bitcoin fits the model of a technological revolution. So these are things that basically change all verticals. Historically, the big 4 were all energy related, like steam power and oil in the automobile. The first one, non-energy, was basically the information revolution. So you can think about that kind of starting in 1971 with the first chip rolling off an Intel fab in Silicon Valley. And I think AI is the late stage development of, I don't think it's a new one. I think it's the continued and kind of late stage full install of the information revolution. If you're long in the tooth like me and started working professionally in the 90s, we used to call it big data, then we called it machine learning, and then we started calling it AI, but it's actually just increased compute power, doing more and more cool shit. So and these things take 5 to 8 decades. That's how long they take for full install. And I think that because Bitcoin faces competitors with very entrenched network effects in the dollar in particular, but fiat currencies generally, and there's obviously a lot of people with a lot of interest in keeping the printing press rolling for them and their friends in different countries, I'd expect it to take toward the high end of that. So my ballpark estimate for full install, where Bitcoin functions, globally, as either the dominant or kind of up there next to the dollar for all three functions of money, is like 2070 to 2080, 60 to 80 years after network launch. So chill the fuck out. Like, it's going to take a minute. As for the 4-year cycle meme, it probably shouldn't exist anymore, except that people trade it. And so it does. So if you have friends that trade and they have, Fibonacci lines on these stocks, like, those only exist because people trade them. They're a popular meme, and you can make money by trading these bounce levels or treating them as resistance or whatever, or support. And then other people do kind of the same thing because you're all drawing the same lines and you subscribe to the same data providers that provide the same things. And so it's just a thing. It's very similar to just people looking at volume charts and saying like, oh, a lot of volume traded at 68K, so that's resistance. Well, it's only because you all tweet about it and talk about it that even matters for the most part. So that's kind of what I expect. I expect it'll take a while to shed it, but I don't think that minor coins and their profitability, it's just so small compared to the total market now that we really ought to be done with 4-year cycles. And I think it's really just the meme that makes it carry forward and still have some power. But that's also why you're seeing the decreased amplification of the bull markets and the bear market pullbacks. So it's just harder to move things in percentage terms as it's larger.
Yeah, makes sense, Cory. And I want to maybe just drill into what, and it's so, like you said, I mean, it's like a 70 to 80 year time horizon. So understandably, it's difficult to see that through in terms of how that happens. But as you think through the transition from a store of value asset to a unit of account asset, obviously there's stable coins that are, kind of getting some sort of adoption right now. I'm sort of the belief that, we kind of have stable coins as a stepping stone. There's some people that think, we might go directly to this Bitcoin as this, global reserve asset. Maybe you hold that belief, but it seems to me that a dollar on chain tends to stay on chain, whereas a dollar off chain tends to stay off chain. And so, getting this global population sort of accustomed to digital currency in the form of a stable coin could help the inevitable transition to Bitcoin as a global reserve asset. Just curious if you have any opinions on stable coins in their kind of current form, and if you think that they could help, this transition to Bitcoin as unit of account, or how you may see that happening.
No, I think that's a bullshit narrative.
Stable coins in general?
Stable coins are just digital dollars. We've had digital dollars forever, and not forever, but for decades. And this is just an extension of the dollar on new rails. Mm-hmm. I think the way that stable coins, which again are just digital records of dollars, they're extremely centralized, they're censorable, they're confiscatable. It's basically just a Hail Mary from the Fed to try to sell more treasuries. So basically think about it like this. If sovereign demand for treasuries has declined and the governments are selling the treasuries, then you have to replace that demand. And the best way you can do that is to market dollars to the people themselves in all these countries where their governments used to hold treasuries. So it's just an attempt to keep the dollar's network effect strong and to supply incremental demand for treasuries. As far as why you just repeated that narrative was written for you by Coinbase and Circle and a little bit of Tether as a way to get the cooperation of the crypto Bitcoin folks to go along with the last election cycle, basically, right? So it was over half of the donations in the last election cycle were from the crypto industry, and they got what they wanted, and nobody has to go to jail, and they can keep on doing most of the things that they wanted to do. And a big part of that was, selling to their own, basically jamming stablecoins through and jamming Genius through, and getting the support of crypto and Bitcoin folks as they basically just did something for the existing dollar network effect, was this narrative of it's a gateway drug of some kind. But when you actually look at the neobank experiences that are spreading these, they're just calling it dollars. And in the fine print, it says that it's like on chain or whatever, but it's purely centralized and it's happening in an app that looks like Cash App or Revolut or whatever. And, it's just it's not how this thing is going to spread. I fundamentally think that was all just a marketing narrative.
Okay. And so then as we're thinking through the transition of Bitcoin from a store of value asset to a unit of account asset, typically the
medium of exchange first, right? Store of value, medium of exchange, then unit of account later.
Got it. Okay.
Unit of account being like you're actually pricing things in Bitcoin someday in the future.
And medium of exchange being like
you're paying
like
with Bitcoin.
Okay.
You're paying with Bitcoin.
Yep. And
it's currency. Right now, it's more of an investment. I see it as store value maps to investment, medium of exchange maps to currency, and then unit of account is pricing and denomination. And
so, as we're thinking through the steps in this sequence, the way that I've sort of, and this might be reductive, just to put it in this like bimodal, just like classifications, but I've typically thought of this as like it can either be an evolution or a revolution. It can either happen like violently or it can happen peacefully. And I guess I'm just curious if you think is it that, distinct one or the other? Do you have an opinion? If so, like on one or the other is more likely as we trace through these steps?
I think the far more likely case is kind of soft landing for the dollar and slow rise of Bitcoin over the coming decades where it just becomes more and more valuable. And by the way, not the only horse in the race. Like I think gold continues to rise over the next 30 or 40 years too. And then eventually Bitcoin starts to take a lot of share from gold. So I think it is kind of three stores of value in the race. There's the dollar and treasuries, and kind of that's just like the Western financial system. And then outside the financial system to some degree, or you could be, Bitcoin is much better at it than gold because it's digital and not needing to be held in a vault. But you have gold and Bitcoin in that race as well. And you've seen, I think when gold was over 5,000, I think it was briefly above the level of treasuries held by governments outside the US in central bank reserves. So it's already kind of there. And Bitcoin is at, 1.3 trillion or something, so it has a long way to go to catch up to that 30, 40 trillion level. Where I see Bitcoin really starting to take off as a medium of exchange is at least $1 million a coin. So whenever that happens, and whenever you have sat cent parity, and then you also have just kind of the easy, able to kind of think about what it is in dollar terms as it gets closer to a penny per sat. So I think that's sometime in the 2030s. I would have said, 5 years ago, I definitely thought we'd hit $1 million before 2030. But, sitting here in the 60s, I don't know. It's tough because I think you'll probably only have one big bull cycle between now and 2030. So I would have thought we'd be kind of, would have hit at least 200K before by now if we were still on track to hit 1 million. So it's probably more like 1 million by 2033 or something like that.
Why do you think we're moving slower than originally anticipated?
Interestingly, it's probably financialization. It's probably the things that we cheer for. I think it's just that it's a risk-on asset in the portfolios of much bigger players that don't understand what they own. I think there's actually a pretty strong case to be made for Bitcoin price being quite a bit higher without the ETFs and without a pro-crypto president. I think we'd be higher actually without Trump in office, and probably debatable on whether we'd be higher without the ETFs. Because again, it just let a lot of people, buy it without understanding it and not have any conviction before they bought it. And so they're kind of the most paper-handed people in the market.
Yeah, it makes sense. There's a ton of derivatives out there, and these aren't necessarily real Bitcoin. And so it's sort of, like you said, led to the financialization of it. These people are buying the financial instrument, kind of buying number go up technology without really understanding the principles behind it. So the more education that we do to ultimately help people understand the value proposition sort of shifts the capital, I guess, from, some more of those paper products into real hard Bitcoin. Cory, man, thanks for helping us understand the way that you see the space. Fascinating stuff. I like how you think in decades. I like the time horizon. Hopefully we can run some fives one day, play some basketball out there, and
Sounds good.
We can get you out there on the point guard. Thanks, Cory.
Love it. Thanks.
We'll see you next
Rob.
time, man. All right, guys, we're going to do a quick break, and then we're going to go to Andy in the tokenization tower. He's got our next guest. We're going to be chatting with Arush from Alpaca. So, guys, don't go anywhere. Be right back after this with Andy and Arush.
Hey guys, welcome back to the Tokenization Tower. It was a great segment with Cory. We've got Arush Sehgal, the head of crypto and digital assets at Alpaca, here in the studio. Arush, welcome to the tower. Good to have you, buddy.
My man.
Good to see you. What a time for tokenized equities with the launch of SpaceX last week. Really kind of blew the awareness up, I think, of what's happening on chain as far as the trading activity on Hyperliquid with perps, on Solana with the native spot trading, and just generally seeing this rise happen. You guys are building a lot of this interesting technology underpinning that at Alpaca. Before we get into that, Arush, I saw your X profile today, had a very interesting FTX unsecured committee part to it, and I can't help but be curious as to what the hell you were doing with the FTX debacle back in 2022. Maybe we can start there.
Yeah, so this was my unfortunate introduction to the industry. And I was one of the largest creditors in FTX. And because of my background building exchanges and being a fintech entrepreneur, the DOJ reached out to me and asked me to serve on the committee, the official committee. So they picked there were 9 million creditors. They picked 9 people to represent the creditors. And the way bankruptcy works is there's the debtors and the creditors, and they're basically enemies.
Yeah.
And so the board essentially of the debtors the debtors answer to, like, the CEO of the company answers to the board of creditors, which is, in this case, it was the unsecured creditors committee, was the class of creditors that was like the main part of the bankruptcy, because there were 9 million of us and there was like not many other classes.
And so you were leading on behalf of all the people who lost money. You also had a significant sum in there, clearly.
Yeah, I had my net worth most 95% of my net worth in FTX, in Bitcoin.
Wow.
And that was, pretty challenging time for me and many people around the world. It was one of those things where very rare opportunity to take part in like one of our biggest financial frauds of our generation.
Yeah.
And like I got to see everything from the inside. Like our job was to basically double check all of the debtors' work and make sure they weren't selling assets under market price, which is exactly what they did.
Yeah.
Despite everything that we tried to do to stop them. It was just, it was a really difficult time for me being on the committee and fighting with lawyers every day. Like it was, and it's an unpaid position. And imagine I just lost everything.
Yeah.
And I was now working full time, like really long hours for the bankruptcy and not getting paid. Yeah. And so it was only a certain number of years I could do that.
Yeah.
Before I had to resign, basically.
Yeah.
But I saw through like the main part of the bankruptcy, and it was really disappointing. I mean, I saw everything from the inside. Yeah. Like I saw the Anthropic position, the Mist and Sui stack, the Robin Hood, like 7.5% of Robin Hood we had. Like it was a disastrous bankruptcy. Like one of the worst executed bankruptcies I've like in history. I think is going to go down as.
I mean, that Anthropic position was just monstrous, and to just have lost that at such a early price, pre-AI boom, is just heartbreaking.
And we made a deal with the debtors to hang on to the Anthropic piece.
Yeah.
And we gave up a lot to get that deal done.
Yeah.
And as soon as the deal was done, they walked away and sold it behind our back. So it was they were completely negotiating in bad faith the whole time. And that's why everything got sold under market price. Because like for those guys, they don't earn on the value that they create for the creditors. Because they're legally bound to be paid by the hour. So that they're so-called not conflicted parties, right? And so for them, they see all these assets as like things they can dish out to their customers or their future clients so that they get the next bankruptcy deal. And like all the participants in the bankruptcies are all like, they may be facing each other in this bankruptcy, but they're partnering on another bankruptcy.
Wow.
And like, they're all in each other's pockets and doing each other favors. Like you'll see lawyers move from firm to firm and then they get promoted, and the judges as well. There's like a complete revolving door, but there's a whole crazy situation. Like the bankruptcy is an industry that is not unlike any other industry. And it's just like, it's quite disgusting, to be honest, and it needs major reform, but that's probably for another day.
Yeah. I mean, this led you to then find Alpaca, to have this kind of journey into tokenization in Alpaca and basically pulling together, bringing, tokenized assets on chain. And that was like the next logical step for you.
So the way that happened is I was working with Arjun from Tribe Capital, who is now the CEO of Kraken, to buy FTX out of bankruptcy. Okay, so we were one of the final bidders, the final three bidders. And it was Bullish, Figure, and us.
Yeah.
And in the end, the lawyers killed the deal because they didn't want the FTX rebooted. But regardless, like that whole process fell apart. And Arjun went to CEO Kraken, and he's like, "Oh, there's a portfolio company of mine, Alpaca, and like you should go check it out. And instead of rebuilding FTX exchange, go build their exchange." And so I came in, met the guys like Yoshi and Hitoshi, amazing founders. I loved the company, and I saw that they had all the licenses to do tokenization. And this was back in 2023, 2024.
Yeah.
So I was like, okay, this tokenization thing's coming and you guys have the best licenses, so let's do this.
Yeah.
And 2025 was like a transformative year for us. And 2026 is going to be even bigger.
Yeah. Yeah.
So
yeah, and so obviously, like the audience understands tokenized equities, deposits, stable coins, et cetera. But specifically with the equities portion, that's where a lot of the activity is happening. You're getting a lot of this trading activity on chain, whether it be in perps or in spot. People are starting to actually hold these things and kind of create a portfolio for themselves on chain outside of just crypto assets. A lot of kind of like bearish market sentiment is leading people to want higher quality assets on chain. Maybe you can just explain to us the relationship that Alpaca has between Alpaca, the DTCC, how that process works, and then how eventually all the tokenized or the majority of the tokenized equities in the on-chain ecosystem are kind of flowing through Alpaca's kind of infrastructure and kind of how that works.
Okay, so Alpaca is a self-clearing member of DTCC, and we're probably the only one that also runs a crypto exchange. So back when all these products were being designed by Ondo and Xstocks, essentially, who like created this market. We were the only game in town because we were API first. We're an API first brokerage, right? So if you want to build any kind of financial products, we've got the best platform for that. And we also have, we were like, you know, during the Biden reign of terror, if you guys remember, like all of our competitors sold off their crypto arms and they had no crypto capabilities. So we were the only ones with a stablecoin on off ramp. And we were, this just became the core infrastructure for all of these guys. So the way it works is we're their brokerage and custodian for the traditional shares. And this includes Binance, B Stocks, Kraken X Stocks, Ondo, Dinari, Fred of the Pod, right?
Yep.
And many more, which some we're not allowed to name yet.
Yep.
But if you look at the total actively traded tokenized equities, we have over 90% market share, like probably over 95% market share. So like ignoring wallets that are inactive and don't actually trade, like the real economic activity is happening with customers of Alpaca. Now, what we do is, because we're their brokerage, right? So orders that they place on the TradFi markets go through us.
Yeah.
And the shares are custodied with us in our DTC box. And that just means our account at the DTCC.
Yep.
And because all of these guys are, like all of those shares are actually within our DTC box and within our ledger, and our ledger is a 24/7 ledger, we can actually execute movements between issuers. And so when people talk about like, oh, there's tokenized equities are fragmenting the market and like there's now this different, like X different number of tokens for the same thing, actually Alpaca unifies all of that liquidity because we're holding all the underlying.
Yeah.
And so we realized this early. And last year we launched a product called ITN, which is the Instant Tokenization Network. It's one of our most successful products now. And what it does is it allows you to create or redeem any flavor of token in kind with the underlying share.
Yep.
So if I've got, and this is how like all of the exchanges are doing the tokenize your portfolio feature, where like you're trading normal securities, tokenize your portfolio, and you can like withdraw it on chain. That happens through ITN because we're doing like the in-kind mint redeem. And there's a lot of, I mean, I'll pause right there. There's a lot to talk about.
So, you know, I was interviewing the CEO of Dinari, and he was talking about how every tokenized share that you hold of their D shares product on chain, there is effectively a beneficiary account, like it's in a sub brokerage that is held 1-to-1 for every share that you own that you can redeem at any time. And Alpaca is that brokerage that Dinari uses, that Xstocks uses, et cetera, et cetera. So when these teams, because a lot of the audience is starting to like question, like, what am I actually buying? Right? Like when I'm buying different versions of these shares, like what do I get?
Okay, so we need to dispel this false narrative that's taking hold right now.
Yeah,
right
because
here
it's happening.
on the roll-up.
Yeah.
Okay. It is nothing to do with the wrapper model or like the Alpaca as a infrastructure provider.
Mm-hmm.
And it's everything to do with the way the issuer decides to like construct their tokenized equity, and like the contract that they're creating defines like the risk profile and the rights that you get. And everyone's doing it differently. And they're all using Alpaca, and they've all come up with different models, right? So it's not necessarily all the same. Like Ondo's different to Kraken's, Xstocks, and it's different to Dinari, but they all use Alpaca underneath.
Right.
So we're like totally model agnostic, actually.
Correct.
And we can also work with the transfer agent model, where the transfer agents directly issue.
Yeah.
So yeah, the way, like, if I can give you some examples, like Dinari, they've done a lot of work to make it like what they believe to be US compatible, right? So they put a lot of effort into making sure that the customers get the NBBO, like the TradFi price. They have a rights transfer, and the corporate actions like relay back to the token holder. Like Xstocks doesn't do that. Xstocks, like they'll receive a dividend and they'll reinvest the dividend into the share, into the SPV, right? So then as a token holder, you end up owning more of the underlying. And they've regulated it in the EU. So that's also something different about Xstocks. that they're registered MiFID II security, so any EU broker can deal these or like trade these and route these. Ondo is slightly different. They have a BVI entity, and in the BVI, it's unregulated business activity. They don't need a license to do tokenization. And like Ondo, I gotta say that Ondo technically is extremely impressive what they pulled off. That no one, and they did it first, which was they managed to ensure that the end user on chain, when they're buying, they get they can like put $1 million clip in and they will not get slipped more than 5 basis points. And they've engineered that 5 basis points because I think it's like what they earn off of it or something.
Yeah.
But they've got the best, they had the best liquidity execute, like the way that you're executed, and everybody started copying them. So actually, if you interested in this stuff, like go buy an Ondo token on 1inch, for example, and then put that transaction into AI and let it, and like tell it to teach you like what's happening with all the smart contracts, and you'll see exactly what they're doing, and it's super smart. And now everybody's copying that.
Interesting. Yeah, and 1inch has started to become quite the aggregator player in the RWA market as well. They've done some interesting innovations as of late there too. What's your view on perps from Alpaca's perspective, right? It's not necessarily in your lane as far as like the direct work that you're doing, but what's your view on like the perpification of tokenized assets versus this kind of like direct or wrapper or native modeling? It's quite a different, side on the spectrum. How do you kind of reconcile the value there?
So I think like it's becoming very obvious now that if you want price exposure, perps is like the most efficient instrument to do so. I think it's going to eat the entire CFD market.
Really?
I think the cost to operate a perp is just dramatically lower than with CFDs, and underlying each CFD is now going to be a perp. I think it's just going to dramatically change the whole industry. These tokenized stocks showed that there's demand for just price exposure.
Yeah.
So the perp is the perfect product for that, and these early tokenized equities kind of prove the demand. And you're seeing that with the SpaceX volume, like most of it's in perps, right? So I think ultimately the perps and the tokenized equities operate different like needs, and the tokenized equities are sort of the collateral in the system, and perps obviously provide you the leverage and the price exposure, speculation, right? So I think they're going to do different jobs, and tokenized equities will become the collateral for perps soon. All the exchanges are going to have to build that cross-margining system.
Yeah. You're here in New York. There's a tokenized conference this week here. There's a lot of traditional institutions that you're speaking with, meeting. Has there been any recent like kind of like light bulb moments from the tokenization of equities segment? Did SpaceX kind of make its way into any of the conversations? Has there been any more material demand or action from the traditional firms on tokenization as of like just the last couple of months? Like just give us a bit of a pulse check from what you're seeing. Any insights from recent conversations with the issuers or the adopters of this technology, where we kind of at? Because from our purview, it's like this maximum all systems go kind of bull market type of energy and pace.
Yeah.
Give us a sense of what's happening on the ground.
So with SpaceX, I think in my opinion, it drew a lot of attention to the IPO process and how broken it is in general. The TradFi IPO system is broken, in my opinion. It's an initial, it's a public offering, but actually it's not a public offering. It's an insider offering. It's like whoever has access to the allocation, only they get like the public offering, right? And everybody else is like trying to get in and they don't get access. Okay, so the demand coming for tokenized SpaceX was also just bringing to light that, hey, like there's something's broken about this TradFi IPO process.
Yeah.
And all these other people, there's real demand here. So now there was this thing that happened with Kraken where they couldn't get an allocation.
Yeah. Same with Binance and Bybit as well. They struggled to get the actual shares.
Right, because Bybit depends on X stocks because X stocks are on Bybit.
Yeah, sure.
And, you know, ultimately it came down to who's giving Kraken the allocation, because they didn't have direct access to the IPO.
Right.
And the way that, and let me tell you something else. This was not a crypto specific problem. If you look on Twitter and you see the customers of Charles Schwab and Fidelity, right, they all had the same issue. And it's because the underwriters of the IPO were like Morgan Stanley, Goldman Sachs, and they have, I think Morgan Stanley owns E-Trade, right?
Yep.
So they obviously gave all of their access to E-Trade, and they don't want E-Trade's competitors having allocation.
Right.
Right. So that's all part of the insider offering.
It's broken.
Right.
It's broken.
So the fact that Kraken had a problem was all to do with, you know, their ability to manage or like secure the allocation, and like basically Morgan Stanley, Goldman Sachs saying like, fuck you, we're not going to give you allocation.
Yeah.
Or like, we'll give you small allocation, right? And nothing to do with the actual model or anything to do with tokenized equities. And there were, in fact, Denari and Ondo, also they secured tokenized SpaceX allocations, and they're, you know, built on Alpaca too, right? So it's like, it has nothing to do with the token. Yeah, I just want to dispel that narrative too.
Yeah. And then just kind of like holistically, I know we're kind of coming up on time. You got a busy day here today. Is this tokenized equity kind of construct something that, I mean, these firms that you're speaking with are just all in on, like they see it happening? Like, is there a level of fear? Is there a level of like value capture? You know, is there any second or third order kind of happenings that we should think about as this progresses and these come on chain? Just kind of give us some insights there.
Okay, this is something that everyone's going to have to understand coming soon, right? Okay. Crypto is the reason why crypto is really interesting for TradFi is because it has the ability to eliminate the biggest risk, the structural risk in the system, which is delivery risk. Okay, so what's delivery risk? It's like when a broker dealer, like what happened with GameStop, Robinhood had to turn off the buy button because they're like, this is like, I'm not going to go into the super details, but ultimately someone has to, if someone's buying a stock, someone else, the market makers are short, and the broker dealer's on the hook for like getting that stock.
Yeah.
And that's settlement risk. If they can't get the stock settle the stock T+1 to the customer, and that's called a delivery failure. Yeah. And crypto has the ability to solve that delivery failure because all trades are atomic, meaning that the buy and the sell happen at the same time and they sell instantly. The problem with this, though, is that if you look at the volume of trading that happens pre-funded versus post-trade settled, it's like less than 1% of global trading volume is pre-funded. And all crypto trading is pre-funded. Like the reason that atomic trade works is because both sides are pre-funding the trade.
Correct, yeah.
So the market makers don't want to pre-fund all these tokenized equities. They're like tokenized equities issuers have to pay market makers to use their balance sheet to make market. And they have an IRR hurdle rate, which is like usually 30%. They need to minimum make 30, 35, 40% per year on their money, right? So they charge the issuers to make markets for them. Now, that is currently where we're at in the tokenized equities world, is that they're all pre-funded trades.
Right.
And our job as a clearing broker is to introduce the concept of post-trade settlement for tokenized equities. Like whenever you introduce delayed settlement and margin, which is, remember, like 99% of the market, you need to have this concept of centralized clearing and multilateral netting. Like this is how the TradFi system works.
Yeah.
That concept of clearing doesn't exist today in crypto trading.
Because we don't even need it.
Yeah, it's everything self-cleared.
And then the blocks hit, and then it's confirmed on chain, and it's done.
So that is coming.
Interesting.
Yeah, centralized clearing and multilateral netting is coming.
Interesting.
And that's like why I'm here in New York, because we're talking to all the players to figure out how to make this work.
Yeah. Well, Arush, I wish you guys some more time, but I know you got to go meet the WSJ out there and do some more preaching of Alpaca. Thanks for spending some time with us here in the tower. I appreciate it. And we'll have to get you back on again soon.
Excellent.
Thank you, Arush. Alrighty, guys, I'm going to finish up the show in just a couple. We'll be right back. Go over the markets, look at some of the chatter on X, and get a sense of where we're at going into the close today. We'll be right back, guys.
We get deep, you know we get deep. We get deep, we get deep, you know we get deep. We get deep, we get deep, you know we get deep.
My goodness. Per, not looking great. Yikes. 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 Hype. Hype. Yikes, man. I mean, could be worse. Anything above 60 is good. This is a must-hold zone. Must-hold zone for hype. I mean, absolutely must-hold zone. This isn't even the right chart. Yeah, this is a must-hold. I mean, this is a must-hold here. For at least any sort of potential trend continuation. I mean, otherwise we're just gonna be chopping around for a while. I mean, I'm seeing people call for the 30s now. That baseline, LOL, y'all rave for sure. Heavens player. Freedom guys back in the chat. Freedom guys, saw your comment, man, yesterday. Glad to have you back live this time. Not the best market today, but we keep going. FTX guy was crazy. Facts. Stephanie, what's up? Yeah. So must hold here, guys, for hype. And I don't know. Don't have that much confidence. Honestly, not loving it. Zcash, I mean, looks to be revisiting at least these 350 levels, maybe. We'll see. Bitcoin, that scared me. Bitcoin, I mean, yeah. Bitcoin might just take that tumble that I feel like everyone knows that a tumble's coming. And it's almost like a musical chair game to like get away from it before it does. But then there's still like upside in like hype and some of these other trades. So, yeah, but it doesn't look particularly that compelling. I mean, we need a hold here. Although, honestly, man, what would not surprise me? I'm definitely not like a TA trader. Like, I'm not gonna trade this, but like, I wouldn't be surprised to get like a little bit lower on Bitcoin and then have like a full reversal back to like low 70s. Like that'd be like the epitome of like, oh, we're going to zero. We touched 60K again or ish. And then we're back at like 72K by like middle of July. I don't know. Obviously it's impossible to know, but I do feel like the inevitable price discovery down in these regions is probably, like I said, it's probably inevitable. Who's doing all the selling? Who's left to sell? Man, I don't know. I really don't know. On Bitcoin specifically, I don't. Yeah, but there's definitely more sellers than buyers as of right now. And then you got stuff like ETH. I mean,
Embarrassing.
Yeah, I mean, ETH just. I mean, it doesn't look that much different than Bitcoin, you know? Except it's consolidating like far below like the lows. You know what I mean? Like it's consolidating under that level rather than Bitcoin is above the level. So that's like the key structure difference, at least, you know? Like this level, Bitcoin's at least like above it. Whereas you guys saw ETH was below it. Yeah, I mean, this is kind of like the must-hold zone, guys. We're still way early, no worries. They're going to get clarity done soon. Yes, I did see something from Watcher Guru, guys. I don't know if you guys saw this. U.S. House Committee schedules Crypto Clarity Act hearing for July 17th. So that's good. It's just a hearing, but... You know, that's kind of like the final day. Like if they don't get it done by then we're in trouble, I think, for clarity this year at least. I mean, I still think it goes through, but for this year, you want to see that thing go through in July. Going back to our trusted data source, I mean, guys, like overall, the thesis still is holding up. Open interest took a bit of a dive. This is a lot of the thesis still for me, so we want to see that hold up. We also want to see this continue. This is the lowest MNAV I've seen in a while on per. So that thing. They're going to have trouble hitting the ATM and stuff because technically, if you take out their tax basis, if they ever sell hype, they're actually under the MNAV now. So those guys need a bounce. I think we're going to get a bounce on hype here. I don't think we're just going to go down, like, I mean, all the way down to like 50s or anything. Like, I think this is a pretty reasonable spot for a bounce. Like, if you're looking at this, like, you got the people that are going to call for the double top, which I think is pretty possible. But I don't know, man. Like, if you do this and you just kind of like zoom out, yeah, it doesn't look great. I mean, this little price action doesn't look great. But I mean, this is what we're operating with. So you know what I've been doing though, is I've been asking chat about charts and just being like, where does this go next? And so it's actually pretty funny when you ask chat. Or anything, Gemini, chat, whatever. Where does this go next? We're still early. NOSCSM, good to see you. Freedom Gry, good to see you. Heavens Player, good to see you. Don't see it going under 57 unless it's actually cooked, then buying at 50. Yeah, I probably agree. I mean, sub 60 incoming from Rugrat, possible. On the 3-day chart, hype looks like it's in middle of a volatility expansion. rather than a completed top. Massive breakout, vertical move, forced pullback to 62 after the previous, still making higher highs. So yeah, I mean, this is what we want. We want to see this, basically. And I don't know if we're going to get it. Bearish is losing that 55 level, as you said, Heavens player. We want to see 57 hold. That's the, because to me, I mean, it's scary. Don't get me wrong. Like, it doesn't look great. But like, yeah, I'm going to give chat the daily chart as well. Like, when you zoom out a little bit, consolidation between 60 and 75 is really bullish. Yeah. Yeah, I mean, this is the issue though, right? Because then the double top comes into play. If we break 60, we're going to go back to that 45, 50 range. And so the structure isn't destroyed compared to the 3-day chart. Daily is showing something more concerning. Second rally failed to make a meaningful new high. That's usually the first warning sign before a deeper correction to reset funding or a long sideways range. What do you guys think? Do we put our financial decisions on trading and investing into ChatGPT's hands? I don't know if that's advisable.
No. Wait.
Let's see what it says about Bitcoin. I wouldn't mind buying at 58. I'm hearing we have until early August for clarity to make sure it gets done this year. I would hope, but I also know that those congressmen and women are going to go off to their summer holidays and they're campaigning for this upcoming election period. Do you not worry that all HIP3 volume is on Trade XYZ? Rob and I talked about that like yesterday, I think, or the day before or last week. It would be concerning if Trade XYZ like broke out from Hyperliquid somehow and like launched their own token or something. But I am not that concerned. I'm more just bullish. There's a market waiting for sub 60 bullish. Yeah, I mean, here's the key level, 60K is everything. Initial panic low, current retesting on top of it. Markets often reset panic lows. Yeah, see, this is what I think is possible, but it's impossible to know. Yeah, it's impossible to know. And 50% chance, but range between 60 to 68K, 35% chance to break below 65 or 60K, 15% chance immediate recovery above 68. For hype specifically, I actually welcome BTC's 60K level more than hype sharp. BTC loses 60K. It's hard to imagine hype holding 60. BTC stabilizes, reclaims 66, 68. Hype gets another shot. Yeah, I mean, this is probably the core of it right there. I mean, I mean that's the read. So I still think it's just holding the good quality stuff, guys. Like, some of these have gotten beaten up a little bit. And like this lower high isn't great. This lower high is not great. Like that doesn't look very promising. But it didn't look very promising there either. A lot of these lower highs. Airdrome's a little bit different, but this daily is really ugly. I definitely bought like right around here last week. So we'll see what happens there. Lighter, also a lower high. Those lower highs are a bit concerning. Hype had a higher high. But nothing has changed about hype. It is on sale. I agree. The structure is still intact, but we gotta hold this level, or else I think it becomes problematic. But look, last time we ran to 75, we pulled all the way back to 53. Makes sense that we get another pullback before trying again. Question is Bitcoin going to allow us to try again, or is it going to have its breakdown? That I don't know. That I do not know. What's the best way? I agree about the quality. The space is clearly consolidating. If you're talking about trading, then ignore my comment. Yeah, no, I mean, look, I'm not really like a day trader, week trader. Okay, framework I do use, you're oversized. If you move from 62 to 45, materially change your life, sleep, or decision making, you're too big. It's the first thing I'd solve. It's probably speaking directly to me. You have dry powder. This is where patience has the highest EV. Instead of perfectly trying to call, you can just scale, buy some here, buy some more, buy more into panic if it reaches major support. You have no dry powder. Am I holding because of conviction or because I don't want to realize a drawdown? Very different. What I would not do, I wouldn't be aggressively trading every daily. I think this is us, guys. I think this is us. I think this is us. This is us. This is us for like Bitcoin, for hype, for a lot of them. It's if you are bullish hype over the next 1 to 3 years, if you're bullish Bitcoin over the next 1 to 3 years, I wouldn't be aggressively daily trading. That's kind of where we're at. I mean, that's this show. Like this show isn't like let's day trade, you know, every candle. It's really just like positioning, trying to zoom out, ride the waves and the volatility. And I think that's kind of like what this show is. So that's where I'm going to leave this. And yeah, I mean, definitely a big daily close today. And I'm not going to say it looks strong in any way. Bitcoin definitely looks a little bit sus, but that's okay. And guys, like I said, every time, ups or downs, highs or lows, Rob and I are going to be here. Rob's going to be in Peru for like the next week or so. Just be me. I'll be here tomorrow, the next day, whatever happens. We're going to push through. I am promising that we're on the tail end of this bear market. It might get ugly over summer. Might get ugly. Might be a little slow. Might be a little bit choppy. Might be kind of zoomed. We might have to zoom out. But I think we're going to have opportunity. We're going to look back on this time period with grace, with gratitude. And we're going to have to live to see another day. So, W's in the chat. Stay optimistic. Stay optimistic. Stay long-term oriented. That's what the show is about. More like these long-term swing investments than shorter-term stuff. And yeah, regardless of what happens this week, next, I continue to say we're on the closer end of this bear. It's almost July. July, August, September. That means like worst case, I think, is we have 3 months left of this bear. 3 months. That's it. That's nothing. In the grand scheme of things, that is nothing. That is just 3 months of persevering through chop and potential lower prices. And that's all it is. 3 months. So, guys, I'll see you guys tomorrow, the usual time, 12:30 p.m. Eastern. We'll have a great show tomorrow again, and we'll stay on top of it. Much love. W's in the chat. Great to see you guys, as always. Till we see you tomorrow. Peace.